Good morning, traders. It is Friday, July 18th. Taking a look at the charts, yesterday we had that pop and move higher. We talked about this yesterday in pre-market. We had the market dip from an oversold territory. This was about a week and a half ago. And it went from a panic selling to a bounce. And then not yesterday, but the day before, we saw this little dip into oversold territory on the S&P 500. We also saw that coupled with some panic selling just before it, which typically means we're going to see a bit of a bounce in the market. And if we look at the SPY, which is pretty much the same as the S&P 500 futures, during regular trading hours, you can see here we had this little green section here. This is where we get into a cycle low. So we had a cycle low pivot in. The cycle low was actually from the day before, which was right here off this red bar. So we had the cycle low, the market flushed down, which coincided with the panic selling in the futures, and of course the panic selling in oversold. Anyway, we have this market scenario. Each time we get into these kind of green bars, the market puts in these little pivots in the markets where the market starts to find a bottom and start to move higher. And we've just had that little bit of a reset. And so the market is primed and ready to push to new all-time highs yet again. This is going to apply a lot of pain to those who didn't play any of the upside. A lot of people who are short are going to feel a lot more pain. I think today we are actually seeing the Russell 2000 up fairly significantly compared to the others. It's up 0.5%. It's not huge, but we're about to see the Russell push to some new all-time highs. And the reality is most traders are into growth and small cap stocks. And of course, a lot of them will be also on the wrong side betting on things going down. And so as these markets go higher, it creates more FOMO for those not involved. And of course, it creates a lot more pain for those who are on the wrong side betting on the markets going down. So probably going to start to feel a lot of stress and emotions when it comes to all this in the market. Is what we tend to see. The VIX and the put call ratio are starting to get to a level here where we're getting close to, I think, a bigger pullback. Now the market has been trading sideways for a couple of weeks, and the VIX is fairly low, and that means people aren't too fearful in general. And so we just have to let this market work itself out and let that happen. The put call ratio is, I like to look at the 5-day moving average, which is this light blue line. It's kind of hard to see. There's a lot in here, but we're back down at these levels where the market tends to have a little bit of a hiccup and increased volatility. And and that's what we've been talking about when we look at our NASDAQ play here. When the NASDAQ has a trigger of a new trend and it moves 15%, we start to get into volatility. And that usually means the market can squeeze a little bit higher, but usually it's going to go into some type of bigger correction. So overall, we're on borrowed time at this point for the stock market. It has made a very significant move. We were able to take advantage of some of that, and now we just need to let it reset, and then it'll give us eventually a new setup. Now, it's interesting. I was looking at, as you guys know, I'm not a news or fundamental guy, but out of curiosity, I wanted to see where we stand in terms of the PE ratios, and I just ChatGPT'd them, and it's pretty amazing. Alphabet or Google has definitely gone to the bottom of the barrel in terms of its PE ratio. It looks like they are kind of getting mowed over by everything else. I think the AI is really going to hurt them. I haven't used Google search and I don't know how long. I use ChatGPT for everything. I just want the answer, although it's not always right, but it is just so much easier than going through blog posts and stuff. And I know Google now also, they come up with their AI answer at the very top. Which is great, but their whole business is on its head with Google ad revenue, I think. But it's interesting, you go all the way up here, and Tesla, I didn't realize how high Tesla's PE ratio is. It is absolutely insane. And actually, if we take a look at Tesla, I don't know what the PE ratio was when it was back up here at almost $500. It's only at 320 now. So I can see why some people want to take a short position and say it's all hype and it's overvalued and everybody's moved in. Tesla has definitely a huge tribe that loves their stock, loves everything about them, and that's why it has such a high value. But you definitely don't want to put bets on just because the PE ratio is high. And Nvidia is high as well, not nearly the same. Actually, I thought Nvidia would be close to Tesla or actually higher than Tesla just because they're the biggest company and it's been kind of the talk for a long time. But anyway, still really high. But I just found it really interesting to those two where they are, just because I don't ever really look at PE ratios. They really mean nothing when it comes to trading, as we've learned. Fundamentals don't really matter. We just need to know when the trend is going up or down. If we